As NVIDIA is down over 10% from its high this week, is it ready to take the market lower? Let's go. There is no doubt that the 22 market crash was fueled by semiconductor sell-off, and the recent pump has caused an epic run. And now that NVIDIA is running into this trend line that has seen it pull back before, how will this impact SPY? Flipping over to SPY, we can see that these two are on the same train. And even though SPY was able to eke out a small gain this week, if we zero in on this trend line, which is similar to what we showed with NVIDIA, we see that this has caused many pullbacks or corrections along the way. And zooming in further to the weekly, if we look at this week's candle, it's what we call a tail candle, where you can see this wick with a small body on the candle. The wick formed above this blue line here, which is the upper Bollinger Band. And not surprisingly, price closed within the Bollinger Band. After all, price does close within the bands 95% of the time. Now, if you're subscribed to the Discord, you know that I've been talking about 555 as a target for a while now. And this has to do with a 5-wave structure, where wave 5, if we throw on the fib extensions, is likely to top out at 168% of the cumulative of waves 1 through 3. Now the question right now is 550 close enough, or will this thing maybe take one step lower before maybe going ahead and hitting that 555 price target? Or is it just going to go ahead and simply reverse off of this price action? We'll get back to SPY in a moment, but honestly, there isn't a whole lot on the calendar besides maybe GDP second revision and PCE on Friday, which can maybe move markets. But remember, PCE is kind of a rehash of CPI and PPI combined, and likely its forecast is clear and has been priced in. And this is what we've been seeing recently anyways. And when it comes to volume, this week had a trading day holiday on Wednesday, so it's tough to make heads or tails from the volume that we see here, as we were one day short. And the MACD line, well, it's been converging for quite some time now. So zooming back out, I guess it's back to this trend line where we've seen reversals occur. And like I mentioned earlier, this is where we've seen the market reverse. And now the question is, will it be immediate and just 1 week down, or will this be something that occurs over the next few weeks? Well, the past can't be a predictor of the future. And we see upon first touch here that this is something where, usually upon first touch, it's something that, we're even able to maybe head a little bit higher before heading lower. And we kind of see this where, at least we attempt to hold the high before heading lower and making that pullback a little bit deeper. And we've seen this really throughout time here. It's something where we're maybe able to continue a little bit higher before rolling over. So I wouldn't be surprised if we hit that 555 target before rolling over. So if we go ahead and remove those rollovers, one last comment about the final week in June. Typically, this week is a seller's delight, as after we have options expiration, the market volatility typically increases and we see a little bit more selling going into the end of the quarter, as this will position investors and traders alike to get ready for the third quarter earnings cycle. Now, another thing, as we enter summer, typically this is an area where the market volume decreases and we're more likely to move sideways. And so we could see a correction through time as well. And of course, no guarantees here, as in the summer doldrums, lower volume really does support the bulls. So as we enter summer, the normal mode of the market grinding higher on low volume, taking the stairs up, is sort of typical. However, this year has been anything but what we see in a typical market from a trading perspective. Also, it's important to note that most corrections occur about every 14 months, and we saw one here that started in the last summer time frame. And if we fast forward 14 months, we're not quite there yet from a statistical standpoint. Now, that is on an average basis, so that means it could be later, but it also could be sooner as well. And just so we're clear, when I'm talking correction, we're talking anything from a 10% to a 20% drop in price is kind of par for the course when you're talking about corrections. When we're talking about pullbacks, we're talking anywhere from about 5 to 10% being a typical pullback. And if the market is a 20% drop or greater, well, then we're talking a crash. To get more of an idea about a divergence forming, let's look at the daily, which is the next lower time frame. When looking at the daily, we see here finally that SPY's closing price lost the 5 exponential moving average, and that is the green line that you see here. And we see here that we finally lost the 5 exponential moving average as price closed below this green line, which is the 5 exponential moving average. Now, it wouldn't be unusual to go ahead and bounce this area and maybe make one last shot at that 555 area. And you can see that back in April when we did this, we had a bounce, but then we went ahead and we had a 5% pullback, which is normal for the stock market. No, but before we get ahead of ourselves, retesting either the 13 exponential moving average and bouncing, or retesting the blue line, which is a 20 simple moving average and moving higher, is the bull trend's friend. Only if I start to see this green line, which is the 5 exponential moving average, start to cross below this 20 simple moving average, which is the blue line, will I be thinking maybe we have a trend change where the market will then be heading lower. But really for now, there isn't anything on this chart that is screaming bearish at this point, as even if we look at the MACD, it's still firmly above the signal line. In fact, once markets get bullish, and this one's up almost 15% this year, they have a tendency of staying that way. So let's wrap it up by looking at a few other charts here real quickly. If we look at the Qs, an area where we've seen again the trend line either cause a pullback or some type of correction. Will we do the same again? As Qs are looking super strong, closing outside their Bollinger Band, but this may be a signal that they just want to take some time to consolidate. And when we look at the Russell, the small cap, this IWM has been consolidating already for quite some time now, but it has been putting in a series of higher lows. Maybe this one is forming some type of pennant before it's getting ready to make its next move as the Bollinger Bands are starting to squeeze here. Plus Bitcoin, the ultimate risk asset, has been doing the same thing here as it is more or less building some type of pennant formation here where it is going ahead and consolidating and maybe getting ready for its next move as its Bollinger Bands are starting to squeeze as well. And even bonds, we see the same type of consolidation type behavior as this has been moving sideways with the Bollinger Band squeezing. Is it getting ready to make its next move higher as well? So does maybe SPY want to pull back a little bit here before making its next move higher? We'll have to wait and see on this one. Well, thanks for joining, as that's all I have for now until the next video, and we'll see you then.